YouTube. That way, if anyone wants to go back and take a look at it, they will have opportunity. So basically, what I've done here is simplified the market based off of 4 data points that I assume and you know can't necessarily confirm, but would assume that every trader can see all the time, right? And that those 4 data points being the open, low, high, close, right? Or the open, high, low, close, whatever you want to use, or whichever order that you'd like to use them in. And so what I've done is coded them in a way that it will tell us when momentum is building versus when the market is not having momentum, or um, when the market is getting downside momentum versus upside momentum. Excuse me. So here we have just your regular continuous contract ES futures chart. And you'll see some of these bars, green, red, and white. And white bars are a representation of a math problem that is either -2 or +2. Okay? If you see a green bar, this is going to equal a +4. Just a math problem, right? That's based off the open, high, low, close. It's very simple. And that's the whole goal of this, right? Is to make one trade a day and make it simple. Right? To be able to just come into the market, wait for this one trade for the day, take the one trade, and follow on through that. Not necessarily going to be a winner every single day, as we know that's just not possible, but it can at least help you stay on the right side of the market, and it can at least alleviate some of the day trader analysis paralysis where you're in and out and in and out and in and out, right? Regardless of, whether you make money or not, that's not the goal here. The goal is to place one good trade a day. Now, if we see this red bar, that's going to equal a -4. Okay, so now we kind of understand the layout of this chart, right? Some of the trend lines you see and some of the other things are just things that I use in the chart. And if you're part of our trade room, you're already used to them and you've already seen them before. And if you guys have questions while we're going through, just type them in the Zoom chat. That way I can get to them as they come. So now we have this, now we kind of understand what equals, or what kind of determines that +4 or -4 or +2 or -2. And that's what just turns the bar a certain color. Now, now with this, what we can do, and me back testing and the things that I've done, is when we get a -4, typically the next day we'll open it. And so remember that we'll be trading off of the previous day's information. So we can use the current day. So 12/1, which was Friday, and then today is the 4th, which is the Monday. So on Friday is the data that we'll use to trade the next day. So the settle or the close, if you guys use that term or prefer that term, it's the same for me, on a +4 day or a -4 day is going to be kind of your break point or your flip zone, so to speak. So if we have this +4 day coming into today, we knew that most likely we want to be, because we're below that settle, right? And so what these green bars are indicating is that we're getting momentum building to the upside. Red bar, right? Momentum building to the downside. So we want to stay on the proper side of the settle. And we're just going to use yesterday's example because it's just going to be easier. So we have the settle up here. So we know that unless we get above the settle, that the market is likely to fade lower. And you can see the market did fade a little bit lower. It's now kind of bouncing more or less. But we're not above that settle. And so what this is kind of telling us is that you need to be cautious with any longs below this. And then if we do get above this level, let's say the market rallies up, we get above that, then we know we don't want to be placing any shorts. Right? And so that's not to say that, maybe up higher, uh, maybe up higher here, right? You look to fade from some previous levels, or maybe lower, you look to buy when you're below that. This is just mainly for an intraday trade, right? Your levels are your levels. Use them how you see fit. But in my experience and my back testing, it's been kind of shown that on these +4 or -4 days, you're better off staying on the right side of the market based off of the settle, right? And so, and you can see if we go back here, um, most of the time, and like I said, nothing's a perfect system, but you know, we get a -4 day here, right? So we got 3 white bars in a row, then we get a -4 day, indicating that momentum is building to the downside. Next day opens up, it doesn't stay above the settle, right? So the settle would be here, the close from this bar would be here, and that would indicate to us that we want to be short, right? The next day, the same idea, it does get above the settle, right? You could see where it did lower, but still a -4 day. The next day opens up, and we can zoom in a little bit just to make it a little bit easier to see. So the next day opens up, so we get a -4, and this is kind of a divergence bar. So we have a -4 here. This is the close, and so we know coming into the next day, we don't want to be short unless we can get below this settle. You can see that we tapped that low and then traded back up. So this is just to give you an idea of what type of trade to take. It doesn't help you with entries, it doesn't help you with exits, but it does help you with understanding the momentum. Right? And I know a lot of people will use or do use other things for momentum, maybe stochastics, maybe RSI, maybe the MACD. There's a lot of things that can be utilized for the benefit of understanding momentum. But this is just telling you intraday momentum based off of the previous day and the previous day alone. No, there's no look back period besides that previous day. It doesn't look 2 days, 3 days, 4 days. It only looks at the previous day's information to decide what color to paint the bar today. So we can see the next day, right? This is a +4. Our close is up here, 42.71. The next day we do not get above that. Momentum builds, momentum builds, momentum builds, right? Can't get below that settle, straight up. Momentum starts to build to the upside now, above the settle, above the settle, above the settle, right? This day here, so we get a +4 day. We're looking to get long above the previous day's settle, and we know we want to be cautious with these shorts. So a day like this, is where the trouble comes in for a lot of people, right? They're like, well, it's a +4 day, but I want to be a buyer. I know I want to be a buyer, so where am I going to buy? And where can I get in so I don't have to take a lot of heat and I can just have optimal trade location? Okay. And so what we can do for this, and let's see if it'll here small. So it's not gonna let us kind of jam it up. Um, gonna, we'll take this here and we're gonna make it screen. And what we'll do, and this is just to kind of show you the, the process. And I utilize the profile. You don't necessarily have to utilize the profile, but I utilize the profile to find value. Value to me is the most important. Developing value and previous day's value are two of the most important concepts in the market for this trading style, I guess you would say. Um, and I also like to utilize a 10-minute chart with value on it as well. And so we can go back and just pick any day randomly how far my TPO data my TPO had. But a good day to pick would be what we just had. So we just had these 4 green days in a row this next day. So that's 11/6. Okay, so that's this day here, and it's an inside day. And so what we'll do is we'll kind of break this apart, and this will give you the idea of how I decide which way I want to be trading. And so copy this. So this is the settle here. And there's 2 plays, right? I've set up these 2 plays. They're very simple plays and they're easy to follow. If you just, just pay attention. I'm just going to explain them real quick, and they're very simple. There's play 1, and play 1 is just an open outside of value. Play 2 is an open inside of value. So if this is our value area from the 3rd, which we know was a +4 day, right? So that means momentum is kind of building to the upside. That means that we want to stay long above the settle. We don't want to be shorting above this settle. We have some opportunity here. And the thing that we're paying attention to is value, right? Where's value from the previous day? Was the previous day a +4 or -4? And then also, where is value developing? Okay. And so the first thing that we look for is where is the open? The open is inside value. So that's going to tell you that we're on play 2, right? And the outcome for both of these plays is the same. That's what makes them so simple. And like I said, that's really the market is just, it is this simple. I know it might not seem it, but it really is this simple. It's just a matter of paying attention and, trusting that it is this simple, right? I think most traders really, when they try to overcomplicate things, they just get into a position where they drive themselves crazy and overtrade, and then typically overtrading, especially on a day trading, you know, uh, time frame where you're in and out within the same day for most of the time, it's going to cause some financial pain. So, an open inside of value, right? You do nothing. You wait until we break either the value area high or the value area low. And the key here is which one breaks first. And so in this case, we open here, you can see, and we break the value area high first. Okay. And so now we know that we're looking for a long. And we know because the previous day was a +4, that kind of doubles us up on our long, right? We kind of get this opportunity that we want to be looking for a long. And so, of course, we're not just going to be simply, oh, we broke value area high, just close my eyes and buy. Obviously, that wouldn't have worked, right? You break the value area high and you come back in. And pop this out. So as we come back in, you want to look for what I call impulse levels, levels where the market kind of bounced from or shot up from, went from a high to low or a low to high, right? And so in this situation from the previous day, and let's do this. So you're imagining that you can't see this. if we were to take some impulse levels, right, we would assume, up here is probably an impulse level. The market hit there and moved lower. And then this impulse level on this pullback pushed it up from there, right? Another impulse level probably from this low here, pushed it up, and then from this low here. So you've got this level, and this level. It's 76. So the next day opens, breaks the value area high. Play number 2 is triggered. Now you're looking to get long. Market pulls back, right? Regardless of where you got long in A period or B period. And we could even switch this down to a 10-minute TPO, just because I like to look at a 10-minute chart. Through our profiles all out of. What day did we say it was? Oh, here it is. So here's your 10-minute TPO. Right? We know this day is a +4. That means we don't want to be getting long below the settle, and we only want to be getting long above the settle, right? So this is going to be kind of our flip zone. We open, take value area high. You can see where B period opens up, or the next 10 minutes open up. Actually, it's not actually B period. Then we start moving lower. We get this inside bar, then D period becomes an outside bar. Remember, we had said 76 was an impulse zone, right? It's impulse zone from here, impulse zone from here, high. So these line up together. Market moves up, market moves up. Right? You want to look for good rotation. I like to use the rotation factor for a full rotation. If a move up doesn't make a full rotation up, let's say it fizzles up, it goes like 8 points and the rotation factor is 14, then I don't really like that low. But in this case, you get that kind of full rotation from here, full rotation from here to high, especially when they make a new high or low. So from here, we get down through that 76 and then kind of pop back up. And you can see where value's building here, even just through E period. We have 3 TPOs here, 4 TPOs here, and now we have 4 TPOs here. We have value building inside of yesterday's value, looking for this long. Peaks below, taps the settle, but doesn't break. Comes back in, and that's where we're kind of looking to strike. And what we're looking for is we're actually looking for the previous day's value area high. Now it does tap it by a tick. It's not always going to be as perfect as that. And then you can see the market does roll over. So this could have been a day where, like I said, we're really only looking for one trade a day. But if you were to have taken a second trade, probably would have got filled around the same spot. It would have came up. It wouldn't have got to your target. And probably would have been stopped out at the settle. You would have went 1 for 1 or 1 for 2 this day, right? Maybe you break even depending upon how much you know. But the key thing here, and this is something that I think is the most important, is that risk management. It really lets you know that, okay, I just need to cut it if it gets below the settle. I don't need to hold on and hope and pray. And in this case, some people will be long, they'll be adding, they'll be long again, and then it comes back up at the end of the day, and they're like, I'm a hero. Right? But if you were to just sit here and trade this whole day, let's say you took a long from here, that's a winner. Took another long from here, another long from here, that's could have been a winner. It would have been a winner-ish, right? Didn't hit your full target, maybe you didn't close, becomes a loser here, right? So you're 1 for 2, and you're probably up just because this move is a little bit bigger than this move. Later on in the day, it gets back above the settle, comes back and holds. If you trade late in the day, which I don't really recommend, you do hit the winner at the end of the day. Okay, so you traded 2 for 3 that day. This is something that is really just that simple, right? Just exactly as simple as I just explained. Do the bars repaint? I'm not sure what you mean, Ranko. They repaint based off of a code that I have installed in them, based off of the open, high, low, close, right? That's how they repaint for toss. And so what we can do is we'll pull over this other chart and we'll just go back, right? I'm actually in the process of going back and collecting all the data for November. We can just kind of go through it together, and then if you guys have questions, Um, this chart. Okay, yeah. So here we are on the first, and this is another thing too, guys. Something that Tommy and I were talking about is, let's say, you know, it's a difficult task to know where to buy, right? To know where to close. Those are two things that, in reality, you're going to have to develop something, and most of the time it's going to be a gut feeling, or it's going to be something that tells you or helps you when when to close or when to open. There's not really anything that I can give you that says, okay, this is when you open, this is when you close. And if there was, um, you know, it would eventually get beaten by a computer system, because if it has these consistent rules, then there is really no chance for it to be successful long term, because somebody will design something to beat it. So there's always going to be some humanality inside of my trading system. Um, and that's the great thing about it, is because it's evolving, and it takes you kind of paying attention to developing value and really understanding developing value. And the only way that you're really going to understand developing value is through continued watching of the market, replaying of the market, things like that, right? You're not going to get better at football without throwing a football, right? You're not going to get better at poker by reading a book. You're going to have to play, right? And so that's the key. You start off with the fundamentals, and if you don't understand the market at all, or if you're brand new to the market, that's something that maybe we can get into later down the road, and we can kind of start from scratch, understand what a candlestick is, understand what a higher, low, close, open is. These are things that, for me, I kind of expect you to do the groundwork. Those are things that you've got to figure out on your own, right? They're very easy to figure out. You buy a book, read the book, take notes, you turn the market on, regardless of what trading software you use, right? This is Sierra Charts. You can use, you know, countless number of trading platforms. TradingView is very simple to use. And so that stuff is going to be the groundwork, right? And so digging into it a little bit more here, and this is where it comes in the execution. So I typically execute off of a 10-minute chart, right? I'm looking at my daily chart. Well, I'm looking at my weekly, monthly, and daily. Then I'm looking at my profile to decide where developing value is. And then my execution is typically based off of this 10-minute chart, or a chart similar to this. I added a couple of things. Typically on my chart, I don't mark the high and the low, right? I can see them. But for here, I want you guys to be able to see it. So we can see in red, right? That marks the low of the day. So as we go forward with this, you'll be able to understand. See, this purple line is the point of control, right? And this is a developing point of control throughout the day. This white line here is the open. That's where the market opens. And this yellow line is the close. My handwriting is really good. And then this is the high. This green line is the high. And then you'll see a blue line on some of them. The other blue line is probably lower here. And this is the R3, and the L3 is. So we're going to start on the first, and we can go through this. And then if you guys have questions, just let me know. Or if I go too fast, or if I start to lose you, just chime in and slow me down. So going back to October 31st, which is this day here, we can see October 31st was a +4 day. Okay. So we know that this day here is a +4. So we see the market open, right? And these green and red and white bars are the same as they are on the daily. I just have them coded into Sierra charts for the 10. We know on a +4 day that we want to be getting long above this settle. Right? So it's interesting here because we have value, which is this gray area. This is the 70% of value or 68% of value, right? The day's time spent in it. And that's another thing too. If you don't understand value and how it develops, that's something that you need to dig into, right? Buy both of Jim Dalton's books or go in our Discord. They're pinned in there for free. Read through them. Watch some YouTube videos, right? Just be careful because some people on YouTube really don't understand value. They understand the definition of it, but they don't really understand it. So just be careful with that. But there's a lot of information out there where you can find this out. And so we come into the next day, market opens, we can't close the gap, right? We do have understand that gap rules are in play, and a gap rules in play this day are go with any gap that doesn't fill early. The market is coming up, so it's already broken the previous day's value area high. So we're looking to trade in to the market on the long side on a pull. Okay. Market pulls back here a little bit. You get your opportunity. And we know that even with this, I put the stop right here at the low of day. If you wanted to put the stop at the settle and head and target a little bit more reward, this trade still would have been profitable, right? You would have hit a 22 pointer. Typically I like to take the daily ATR and times it by 0.7 or 0.68. That kind of gives you what profit target you should be looking for, what kind of range you should be targeting. And so you have an opportunity. And like I said, I'm really only looking for one trade a day, and I'm looking to trade with value, and I'm using the +4 -4 in order to keep me on the right side of the market. In some cases, that developing value gets you off sides or vice versa. Right. And so I'm really only looking to trade with value and then using the +4 -4 to determine whether or not it's a good trade or to help mitigate risk, right? Because I'm all about risk mitigation. I classify myself, and I've said this for a long time. Stick to your trade plan and manage risk, right? And the reason being is one, if you don't have a trade plan, you're gonna trade like shit over the long term. That's just a fact of life. And if you don't believe me, send me your P&L for the last year, and I bet you if you're trading without a trade plan, probably lost money. And number two, manage risk. There's a common misconception that you can just win trades every single day, right? And I think that's an unfair statement. There is people that do it, right? There is people that win trades every single day. Maybe not every trade, but you can be profitable most days. Some days you're going to lose, but the days that you lose are really the most important days for you, anybody in general, because those are the days that define you. Because typically what happens is people get on a hot streak, newer traders get on a hot streak, and they're winning every day. They're unbeatable. I know the market. I'm the fucking matrix market maker. I do everything. Then on their losing days, they lose thousands or they blow their account, or it's just a catastrophic loss that's going to take them months to get back to where they were, right? And that's no good. That's You work at any trade desk, you're going to get fired, right? Regardless, if you over leverage and even win the trade and make money, but the trade was just a bad risk trade on a real trade desk, you're going home, right? You're going to get a phone call and you're going to talk about it and you're going to go home. That's going to be it. They're not going to let you continue to trade, and you're risking their money when you're trading on a trade desk. And so it, it can definitely be yeah, the snowball effect where you go high risk, you win. You go high risk, you win. And then you go high risk and you blow out, and then you continue to go high risk because you've won before, and it's like you've tasted the success and you know you can do it. But you, what really happens is most people just don't understand that it's luck, right? They got lucky and they're unwilling to kind of admit that it was luck. They're stuck on this thing that they assume was just skill, and it gets them in a bit of hot water. Okay. Um, so back to the value here, and where we're looking to trade with developing value. And so here we can clearly see value this day finished higher. And so obviously, you know, it's easy to put these on and say like, oh, okay, this is where we would have traded. So as this develops, you know, you get these pullback areas, and where's our impulse, right? Impulse from this bar goes all the way, makes a new high. We like it in here. Let's say we take another trade in here. Let's say we get in early. We're risking it against the settle. And you know, you like to look for 2 to 1, but really I just like to look for either value area high or the high of day. Um, and so, you know, let's say, you know, obviously this day would have ended up getting 2 to 1. Um, but maybe you get out there, right? You get back in. If you like to get back in late in the day, you get back in the same spot, same risk, same target. So this day could have been a very lucrative day, right? This is November 1st, trading with value. Let's move on, right? We're just going to keep going through these examples, and really that's just the best way. Like I said, repetition is going to build your base, right? Because if you don't have a full understanding, or you really can't understand value, it's going to be difficult for you to kind of pick up on this concept. This concept is so simple, guys. I can't express it enough on how simple. Hey, Barish, this process is. It really just takes the guesswork out of it, or takes the the disbelief out of this system, or out of the market. So let's move on to the next day, and what we can take away from is, right, we had a winning day. The amount of points is kind of irrelevant. You're just looking for that risk mitigation. And was this day, and that's the first, was it a +4 or -4? So we come over here, we find the first, it's a +4. So we know going into the next day, we want to be long above the settle. Okay, so here's the settle. We open up on a gap, right? And, you know, there's the gap. We kind of trade sideways at the open. We look to get long against the low. Right? If you wanted to risk a little bit more, you would have had to wait for a pullback. On this day, it doesn't really come back. Looking for these nice impulse zones. This day ends up being winner, right? Value finished higher, never traded back in a range. Now, these are kind of tough examples here because they're on a gap. Next day, the second, another +4 day. So we're looking to be long above the settle. Here's the settle. We get another gap. Boom. Market trades higher, right? Value trades higher. The market never builds value lower. And on a day like this, what you'll hear is on this move down here, everybody's like, they're getting short. They're looking to close the gap. They're just getting short. Well, let me break this down for you guys a little bit, right? Because everyone wants to be inside every. And remember, as a trader, right, you can still be a trader regardless of if you're in a trade or not, right? A lot of people think, oh, if I'm on the computer, or if I'm where I'm at, if I'm not in a trade, or if I'm not doing a trade, then I'm not really a trader, right? And they're looking to just over manage trades. Typically, people over manage trades, and that's what gets them into hot water. And so what happens is you get this initial move to the upside, right? We're above the value area from yesterday. Let's say if we did break down here, right? You want to be a hero shorting from here, Or would you rather, think about how value develops and take a long from inside the previous day's value, right? Because what do we know about value, right? If you don't know, typically you'll have your value area and you'll have excess, kind of your outliers. And for the most part, unless you get this kind of continuation, there's reversion to mean. Right? And it's pretty much always, the market is always in search for value. So on this day, it just found value higher and then ended up trading higher for the rest of the day. So with something like that, that's the area that you want to be going. So, and I'm sure on this day there was plenty of people trying to get short, trying to get short, trying to get short, trying to get short, trying to get short. Maybe they were winners. Maybe they timed the market perfectly, right? They were hero. Um, but on a day like this, had you bought pretty much anywhere, even if you got long at this very top tick, right, on the first round up, you're like, oh, it's going to keep going. I get long here, right? And you hold, comes against you, and then comes back into profit. Comes against you, comes back into profit. It comes against you, and then this is, if you got filled on that top tick, would have been a loss, right? But had you been in and out, in and out, in and out, in and out, trying to get short on a day where this is a +4, no, we don't want to get short. Had you been getting short, regardless of where you got short, if you won, won or you lost, you're just trading against the market at that point. And trading against the market is typically a recipe for disaster. That's just a fact of life. So heading to the next day, and this day here is the third. Over to the third, we have that +4. So +4, what do we want to do? We want to make sure that we're long above the settle. We open, we actually open here, we break value area high. That kind of confirms our upside bias. We come back down off of the settle. Now we're looking to get long. We come up, we can't break the value area high. So what do we probably do? Probably hold that position. Right? You get opportunity to take it out, right? Not for much of a gain here. This over. It's just, I like to pull at equilibrium. And we would be short against, or long against the settle. So to get a 2-to-1, we would have had to get basically back to the high of day. And so typically, what I would say is you have opportunity here trading with value. You can see value just is overlapping, so it's a tougher day. But it does come back below the settle, and that helps you mitigate the risk. Probably get stopped out here for a 5-point loss. Okay, well, that's not bad because we made 21 points yesterday, made 23 points the day before. Okay, so that's November 1st, November 2nd, November 3rd. So you're sitting here, you're up, 40, let's say, and now you go down 5, so you're up 35 points. The next day, what do? We open up, and this day was this inside day here. And then we have a developing +4 day going on. And so we open up, and this is one of those days. This is one of those days where you've got to pay attention to developing value. And so these are the days that can be kind of tricky. So this is just either a -2 or +2, right? Not really important. Whether it's negative or positive. And I've gone back, far, and there's no really good information to draw off these +2, -2. As much as I would love for them to be useful, they're just not. Bearish for the +4 or the -4, it's just based off of the previous day's open, high, low, close. So you have T1 and T2, and that's how you get it. So on this day, we had a +2 or a -2, and then this day actually closes as a +4, and that's because the open is above this open, high is above this high, settle is above this settle, and it's low. Simple. It's that simple. So you just have a higher open, higher low, higher high, higher close. That's it. 4 data points. And the reason I've chosen these 4 data points is because these are 4 data points that I assume every trader is looking at, right? Because not every trader is going to be looking at a 50 moving average on a 10-minute chart, or a 200 moving average on a 1-minute chart, or a MACD, or a whatever, or the chalk and money flow, or the fucking made up thing from Crypto Face, whatever that thing's called. Think of the name. Whatever the fuck that thing's called. Um, but not everyone's going to be looking at that. But there is one thing that pretty much everybody in the market is going to be looking at, and that's the open, the high, the low, and the close. Now, regardless of if they use them as data points or not, they're still going to be there, right? They're still going to be there because if they're looking at a candlestick, they're looking at the open, high, low, close. Now, if they're looking at Heikinashis, not everyone's looking at Heikinashi. So maybe those Heikinashi people are not. But when you look at a daily chart, and this is where the +4, -4 stems from, is a daily chart. Typically, everybody's daily chart is going to show the open, high, and the low. So really, I think market cipher, that's what it's called. I think it's that simple. And I posted in the Discord these trades from September and October, and you could see just how profitable they were. And then when compared to my actual trades, they actually beat me a little bit because I made a couple of mistakes along the way, because obviously human error can kind of get in your way a little. But as we develop a little bit more rules to this, or a little bit of more things to help us stay on the right side, or to get one of the most important things, which is favorable trade location, you're going to have more often than not winning days compared to losing. And so what happens here on this day, and this is the 7th, is when we open higher, right? That's kind of your first signal to pay attention to. We break the value area low first, right? We have very narrow value area. Remember, this day was a +2 or -2, not important. But this kind of lets us know, okay, well, we opened higher, so there's one data point for the upside, but then we just broke value area low, and then we kind of quickly come back in. But typically this would say, okay, we probably want to be looking to get short, right? Because we want to be trading with value. But what happens is we don't spend any time. So here's a period, right, on the TPO, and this is why I look at the TPO for value, not the 10-minute chart. Like I said, my 10-minute chart is my execution chart, because it can be a little bit it doesn't show value as much as the TPO chart does. So B period opens up, and B period takes the value area high. So now we've taken both the value area high and the value area low, and value for the most part is just overlapping on both sides. So there's not really any clear indication on what we want to do, right? And then the next period, C period, opens up. It's this period here, and we take the high. Well, now all of a sudden we have a developing. This day would be developing until it closes +4. We go, okay, well, now that we're up here, let's see if we stay up here. D period, E period, F period, G period, right? And so now all of a sudden, we can't get back down into yesterday's value, and barely getting back down into yesterday's range. So we tell ourselves, okay, well, we want to be going with developing value. Sometimes you're going to have to wait longer to get into the trade. And where do we want to, get long? And let's just say, give us unfavorable trade location, and we know that we don't want to be getting back into yesterday's value. That would kind of ruin our thesis that value is going to develop higher for the rest of the day. Okay. And so what's the highest point here? You're looking at about 11 points max. And one thing I do want to bring up too before we continue is a lot of times I get asked, hey, where are you putting your stop, right? It's the most unimportant question that I ever get, because what does it matter, right? So let's say you take a trade and your stop is like this initially. Okay? The next period opens up, so you got filled here. So the actual max amount of risk that you took was 1.5. That's what you actually took, right? And then it ends up going up, you know, 8 points. People are like, oh, well, where's your stop initially? What does it matter where the stop is at initially? You know where you're wrong for sure, right? That's back in yesterday's value. So just close your trade, right? You get back down in there, you lose 10 points. Okay. That's just part of it. Right. So stop worrying about, where do I place, like, it's like, where do I put my hands? Worry about, are you taking a trade in the direction of developing value? Let's move on to the next day. And this day ended up finishing as a +4 day. Now we get an open, right? We break the value area high. So we're looking to, kind of assuming he's going to finish higher. So if we look over here, right, this is that day. We get 8th now, which is here. We break the value area high. We start looking for a long. I kind of assume that this day probably would have ended up getting you stopped out, right? Go over here. Where are you looking for? You're looking for this impulse area. So 390. Let's say you get long here. In reality, you're looking for that value area high. Max risk that you would have taken would have been 12 points. Actually 16 points, excuse me. And you get this kind of overlapping value, right? So it's a tough day. It trades sideways. Maybe you win, maybe you lose. Probably going to chalk this up to a loser, right? Now, there's other opportunity to get back into a trade like this, but the neat thing about this is that's why we're incorporating this +4 -4. So what happens is this day here is a +4, right? We want to trade with value. We break the value area high first, so we're looking for a long. The market immediately starts trading below the previous day's settle. So we're not going to get long here, right? Just not an advantageous trade. And so most likely on this day, there's no trade available. Maybe you get short because a lot of times with, and this I guess is another thing that should add, that I've kind of come to the conclusion of on these +2 -2 day, or +4 -4 days, is when we get a +4 or -4 day, we can assume that momentum traders are piling in. So if we get below the settle, and we're just assuming that that's where their break point is at, if we get below the settle, then we should get a liquidation or a short covering rally if it's a -4 of those short money traders, right? Short money just means that they don't have the ability to necessarily to hold a position for an extended period. And so that's kind of the beauty of this, is on this next day, we're looking for a long, right? Being patient, waiting for a long. Well, our impulse zone here is below the settle. Really no opportunity here. Maybe on this bounce here, caught one. Probably not. There was some opportunity inside that area, but with a peak below the settle, you're not really interested. Now we get all these closes below the settle, value shifts down, it's starting to build below the settle. In that case, there may be some opportunity to fade against this +4 and go short from that settle. And that ends up turning into a profitable trade. Now, it's not necessarily the play 1 or 2, but it is trading with developing value and using that +4 -4. And like I said, there's no easy way to just decide, hey, I want to do this today and that's it. And this is what I'm going to do no matter what. Blah, blah. You always have to take, especially if you're a day trader, what's developing right now, right in front of you. Because oftentimes people just forget about the right side of the chart, right? The chart and when I say the right side of the chart, I mean the chart that is developing at this moment. People are paying attention to the left side of the chart, like, oh, there's a divergence, oh, the fucking blah, 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 right? All that extra nonsense, and they forget about what's going on right now. If you're trading on a longer term, then, maybe the current price action is not as important, right? Maybe the current developing value is not as important because you're looking at a larger scale. And I'll actually bring that into this at the end when we finish off this month of November and show you that it is important and kind of break that wall down and explain to you how easy it is even on a longer time. So next day opens up, and this day here was the 7th, right? We had a +4. 8th opens up, but we get below the settle. And honestly, I think there was probably two solid opportunities in this day. I think the real solid opportunity and the trade that I would have taken would have been a short, and it would have been a short below the settle. I would have been targeting value area low. I would have been able to kind of use the settle as a stop, right? Because I know on a +4 day, I definitely don't want to be short above it. So that play, I would say, was a workable day. You get a liquidation down here, and to get to 2-1, you're in the trade very, very short amount of time. And then there was also another trade in here, I think, with a failure to break the previous day's low. We climb back into yesterday's value, so you have a rejection of lower value. And in a situation like this, when we're paying attention to developing value, right, we put our stop at the low, and what we're looking for is the reversion to mean. Like I said, typically the market is searching for balance, searching for value all the time. That's what it's always doing, even when it's in excess. In excess, look it up. Like I said, you're going to have to do some of this legwork yourself, and we can get into a beginner's class if there's enough demand. I could really start on page 1, but that's not something that I'm going to get into right now. And you're looking for just kind of this reversion to mean, because we trade below value and then can't get acceptance. We don't spend time down here, and time is really what the key is. If we fail to spend time down here, we can just kind of assume that we're going to revert back to the mean. There is an opportunity to get long at a lower level, but because the previous day was a +4, I don't think I would have taken that. I probably would have been done nice and early, right, with another 6 points. And so if we chalk this up and we go back to the first, just to kind of see where we're at. So you get 20, let's just call it 20. We'll just break all these down to even. 20, 40, 60. You said this day was a 10-point loss. That puts us back at 50. This day you hit an 8-pointer. We're going to round it up to 10. So we're back at 60. This day here, like I said, you get this nice one that's 6. We'll call it 65. All right, on to the next one. And what do we have here on this day of the 8th? Another +4. There's the 8th. It's a +4. Reason being, right? Close, open, close, highs. Everything's up. Right? Does that make sense? Is that +4 -4 thing pretty clear for you guys? And pretty kind of easy to see. And then you can kind of use that as it's developing in that situation. So here's the next day. Open outside or inside value, and this stays a +4. We break the value area high. Obviously, we came all the way back down. And remember, these bars are not, we opened actually at the high. Excuse me. We opened outside of value, break the value area high, +4 day. We'd like to look for a long above the settle. Well, at A period, and this is A period here, has already broken that settle. So we're thinking, what are we going to have here? Opens up, we get below the settle, and now we've got our first close, well, second close actually in a row below the settle. So we're thinking, not really any trade here, um, because we're looking to get long to go with, but there's nothing. Come back down in below yesterday's value, and some buyers show up. There's a pullback to the settle, and you get a little bit of a baby bounce, right? This day, I would say you probably do end up getting long. And it's probably from up here. You're using the previous day's settle, your stop. And if you're looking for a 2-to-1, I mean, look where you got to go. Nowhere. So let's say you don't get filled at this low tick and you get filled at this high tick. And you're looking at the previous day's settle. You know, the thing is that it's there. Okay. And even if you take the loss, well, we lost 3 points this day. Oh, and this was a +4 day. So what are we looking for as the market starts to go below previous day's value and below that previous day's +4? Brings it down. Look how wide we are down here now at the TPO. So we've got, let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, 13, 14 there. We've got 1, 2, 3, 4, 5, 6, 7, 9, 10 below. So what would have to happen in order for this thing to start building value higher is the market's going to need to come up, right? Well, it fails to come up, and there's probably an opportunity to get short. And typically, you probably would have gotten short this day, and it was an outside day, but we're going to call it a 5-point loss. So now we're back at 60 points. And this day here was just the +2 -2 day, an outside day of settle on the low. Next day opens up, then remember we're paying attention to value here. So +2, -2. So this gives us no information there. So then the next, when we have that, when we don't have that previous day that's a +2 or -2, and we're focused solely on developing value. Okay. And the first thing that we have to look for is a break of either the value area low or the value area high. Market opens up right here, trades lower, doesn't break the value area low, which is actually a little bit, breaks the value area high here, right? Or taps it, breaks it here. Trades sideways, trades up, trades sideways, and now you're at the previous day's high. Right? So there's two opportunities in this day where you're getting long. One is probably from here. You're probably trading against using your brain and trading these distributions. So you're long after the break, you get long above the previous day's value, and you're looking for it to stay in this upper distribution because that would show acceptance of value higher. You want to make it 2-to-1, you're going to have to look for a pretty high target. But like I said, the place you put your stop initially is not necessarily important. When people talk about risk to reward, they're like, oh, well, I'm going to get in here, my stop's going to be here, my target's going to be here. How many times do people actually let their target get hit? And then second off, how much heat did you actually take? That's your actual risk to reward. Your initial risk is different than your actual risk, right? Because if you get filled at this 43.96 and the market only went down to 43.94, well, how much risk did you actually take? Right? And that's what you've got to factor in, and that's going to come into your own journaling and things like that. And so in this situation, typically I'd be looking for the previous day high, right? My stop initially probably would have went lower. Honestly, I would have probably would have got long back through the open. Typically, when you go down, fail, can't break value area low, come back through the open, start to hang. I probably would have got long down here. I think I probably have to. I'll look back when I document all these trades later. But regardless, you break higher. Okay, you hit that previous day's high, and nice little 13-point trade, right? Didn't really take too much heat, if any at all. And then you're out of the trade. So you've made your one good trade a day, but maybe you're like, oh man, this thing's holding the previous day's high, value's still developing higher. I want to take it on, but I don't know what I want to do. Well, you can see we only traded so many bars here, right? 2, 3, 4, 5 here. And you can see this distribution. So it'd be kind of an easy risk to get long on the break of the previous day's high and the failure to kind of re-enter. So let's say maybe you get long up here somewhere. Right? You've got your stop, previous day's high. If we get back inside the previous day, that value is likely to build a little. This trades all the way up to 41.33 for another 17 points max. But let's just say you get a little bit spooked out. You trade sideways here, so you catch another 6. All right, so you got 13 plus 6. That's another 20. So far this month we've had 5 winning days and 2 losing days, and we're sitting at plus 80 points, right? Take it, times it by 5, times it by 50. This is just a one lot trade, so do what you will with it. It's a pretty penny, right? Next day, 13th. Remember, this day wasn't a +4 or -4 because we have that low open. The next day opens inside value, wasn't a +4 or -4. So what do we have to do? We've got to wait until we get a break of value area high or value area low. First thing we do, and then later in the day we break value area high. Comes back in. I mean, just a perfect trade comes in for you. You get a little bit of a pullback. It even trades sideways to let you make your mind up. Just sets up. You're trading against the low of this distribution here. You make another 10 points there. Okay? Your stop was 7 points. You made 10. So you have a 2-to-1 risk to reward ratio. Yeah. Let me see everyone's trade and make sure that they're 2-to-1. It's just not going to happen. Moving on. You get a gap day, right? This tends to be a little bit easier day to trade, right? Obviously, in order for, and let me explain something too, for value area or for developing value, what has to happen? And these are two things that we always ask ourselves before the market opens. And if you're in the trade room with us in the mornings, you hear me say this constantly or repeatedly, is what has to happen for us to develop value higher, and what has to happen for us to develop value lower? That's time, right? We got to spend time there. And so, we have a rather large gap. And so what are the odds here that we get value developing lower? Well, the market's going to have to shit the bed right away and get below the previous day's value area. So what do we know on this day? Well, let's just only get long, right? It's a developing +4 day, right? Open, low, close, high, all higher. So let's only get long, right? And where do we get long from, right? That's the real question. That's the $1 million question. Well, it doesn't really fucking matter on a day like this, right? Even if you get long at the high, eventually you come back into profit. And so on a day like this, really, you just be patient, let the market fizzle out, let some momentum shorts pile into the market, and then get long. That's it. There's another 10 points for us, right? Now, would your stop have been all the way at the low? Not necessarily, but the thing is, like I said, the risk you take versus the initial place your stop is at is irrelevant. You're really looking for how much risk did you actually take? Not like I got in at 4,000, my stop was at 39.90, so I took 10 points of risk. Well, did you take 10 points of risk? Right? Because it only went down to 99. So that's really the key there, is how much risk did you actually take? And so moving on, right? We get a +4 day. That's here. Next day opens up. What do? Play number one, open outside of value, break the value area high. We know we're looking for a long. It's back above the previous day's high, comes back in, right? Here's the settle. You know we don't want to be short above that. Even if you waited all the way till it came back, right? They're still winning trades had you just stayed long. And you can look back at these yourself, so you can make sure that I'm not blowing smoke up your ass. But if you trade in the direction of developing value, more often than not, even if you get an unfavorable trade location, and like I said, that's one thing that you're going to have to decipher on your own. I'm not going to be able to tell you where to get in, where to get out, how to wipe your ass. These are things that you have to watch the market and develop a grasp on, right? And messaging me or emailing me when, asking me those questions, one, I don't have time in the middle of the day while I'm trading because I'm paying attention to the market. I'm trying to learn every day, right? That's what you should be doing, is trying to learn. If you're not trying to learn, then what are you doing? Just fucking, you're gambling right here. And you got better odds going to the casino than playing blackjack. Remember, $100 is only 10 hands away from over $1 million. Just keep fucking letting it ride. And 10 hands in a row, boom, bucks. So, if that's what you want to do, then might as well just find a casino near you and just take $100, put it on first hand of blackjack, and let it ride every play. And so you've got to develop an understanding of the profile, and that's the thing, is like I'd love to give uh, another class kind of breaking down value and stuff, but there's really not kind of a huge demand, and because we have like a very tight knit group, and this is more for the people on YouTube, not for our people here that are already in the trade vets. We have a really tight knit group that we focus on this every single day and understand it, question each other, and really try to drill down into what we're getting into. But for those of you that are watching on YouTube, this is something that you're going to have to either come in the trade room and just be a fly on the wall and pay attention, or you're going to have to read books. You're going to have to watch the market. You're going to have to watch replay. Be like, I don't have time, right? Fucking bullshit. Okay, make time, right? There's time that you waste during the day scrolling on TikTok, Instagram, Facebook. Fucking watching TV is a fucking waste of time. It's the Cowboys. Other than that, it's fucking just a waste of time, right? So make time. If you really want to make this work, you got to make time. Moving on. Next day, we've got a +4 day, right? This day, the 15th, ends up being a +4 day. We're here. So what do we know? Right, in a very narrow value area. Let's see something. Not even be on 168. Yeah. The next day opens up, breaks the value area low, and so this is kind of a different type of day because we know this is a +4, so we know we don't want to be getting short above this settle, but we do want to be getting short because most likely value is going to develop lower. So we wait till it gets back below the settle, and you can wait a little. We'll use the settle as a stop, and it ends up hitting another 13 points. So we were at, what did we say, 80. We hit another 10er, that's a 90. Hit another 13er, we'll just call it 100. So we're up 100 points this month. Times that by 5, you're at $500 for the month. Times it by 50, you're up 5K. We're doing pretty decent this month, and we're about halfway through. This day is it's a nothing, right? Doesn't end up being anything because the settle of this day, right, had a chance to be a developing -4 day, right, before the settle. So as the market down here, the intraday bar would actually be coloring red. it would be a developing -4 day, but because the market rallied late and the settle was higher or the close was higher than the previous day close, it turns back into a negative. Like I said, is doesn't provide any value. Next day opens up. We break the value area high first, so we're looking to get long. Market just trades sideways forever, right? So this is one of those days where we're like, well, we don't want to see it get below the low, because if it does get below the low, it's probably going to start developing value lower because of all of the time spent right here, right? We look to get long, and like I said, I like to target the previous day's high. Anything above that is just whipped cream. But you know, it ends up going higher, right? Even gives you a late day pullback that you can get into. Even here, decent pullback. So another 15 points, we'll just call it 100. Next day, kind of the same idea. We open up, we break the value area high, but this time we never come back in. So then we've got to find an area where we want to be getting in on a pullback. And so what do we like to use? That prior day's high. What hits that prior day's high? Let's say we get filled here. We're going to use the prior day's high. And this day was a +4 day. We want to be long above the settle. And we never come back inside that previous day's range. So honestly, there was never a reason to close this trade, and you probably held it all the way to the close for a 23. So we're at 130 for the 21st. What day was Thanksgiving? Was it the 21st? No, Thanksgiving's here. Okay, so the 21st we play. Some days, if they're a holiday, we're not playing. And this is a day where there's probably no trade, right? We open up, we have a +4, and we're below the settle. So we know we're really only looking for shorts. We never really develop value anywhere besides inside. So maybe you catch some shorts. You got short on the low, you end up being a loser. Wait till the pullback to get short, you ended up better. So there's some opportunity there, but probably a day with no trading. You get that kind of +2, -2. This is that the 21st. It's an inside day. Next day opens up, and what do we get? Well, we never come back into value. We do tap the previous day's high there. Market rallies, pulls back, opportunity there. Take this thing higher, pulls back, opportunity again, pulls back again late in the day, and still bounces. Finishing as a +4, developing +4, closes as a +4. So we'll just call it, let's say we got into the trade here, and we'll call it another 10. So we're at 140. This is a holiday. We don't trade. Another half day. This is a holiday half day, and then this is the actual holiday. So pay attention. Market opens, breaks the holiday's value area low, and just kind of trades lower. Rallies back up, can't take the high. So we get an open that's lower, close that's lower, a low that's lower, and a high that's lower. So we get a -4 day here. It's the first day back after the holiday. So a tough day to trade. Probably no trades because you're not really getting any solid information. Value does develop lower. So if you had taken shorts from inside yesterday's value area, most of the time they probably paid off. Might not have been big winners, but it would have been. Remember, we have -4 here. We don't want to be getting short above this settle. Market opens up, takes the value area low, and kind of never looks back. You get an opportunity a little bit later when we get back below the settle to get short, and the market just kind of fizzles on from here. Value pretty much overlapping to lower. So kind of had you stayed on the short side, you probably would have been a winner, but it would have been depending upon your trade location. Now, say you get long at this settle here, okay? Or short, excuse me, because it was a -4. So you get short at the settle, you take a bunch of heat. Probably would have got stopped out at the previous day's high. But let's say you just had your stop exponentially higher. Well, it comes back down, right? And what would you have accounted for is, well, if the market can't spend time above yesterday's value area high, the odds are reversion to mean. So this day, we'll actually just call it a loss. I think it probably would have got most people. And we'll just say they shorted here. They stopped out at the previous day's high because that would have been management and loss. And so we're looking at a 7-point loss. So now we're back down. What were we at? 130, 40. We'll call it 10 points. It's 7, but we'll call it 10. We're back down to 130. Next day opens way up here. Right? What are we looking for? We're looking for value to develop higher. Goes down inside yesterday's value, pops back up. Opportunity there. Where do we target? Previous day's high. This day would have been a win. Had you tried to do it again, you probably would have got stopped. Now, because you know, and this is kind of the reason that I'm really only looking for the one trade a day, but you know, there's opportunity for multiple trades, but most of the time the first trade is probably going to be the best trade if you wait patiently enough. Like I said, so this one could have lost. We'll just call it back at 140. Open. First thing we do is break value area low. Kind of trade sideways. Continue. You're looking to get short here, and that's a winning day. Regardless of kind of where you got filled. Let's say you got filled under yesterday's settle. Had the opportunity there for another 14 points. We'll call it 10. We're back at 150. And it's exhausting, I know, because it's so simple, and you're like, what the fuck? It's not this simple. And it is. You just got to take a step back and realize that it really is this simple. And this is not just something that I'm saying, it's something that I do in every day. And you could even, get verified by other people. Me and Tommy are constantly texting, being like, "Oh, this is the move today. Value's going to be higher. Let's get longs. Value's going to be shorter. Let's get short. Is today +4, -4?" Right? Just key things that you just pay attention to, and they just point you in the right direction. Like I said, trade location is going to be important, and that's going to be where the variables come in between different people. And if you just try to be patient and wait for that trade location, wait for that favorable trade location, then typically, even if you do end up taking some heat, as long as you're trading in the direction of value, you're probably on the right track, or probably going to end the day in profit or with a small loss. And another thing too is like when we're doing this, it's there's so much want or almost a necessity. It's like an urge or like an addiction for people to be in a trade. They're like, I need to be in a trade. Oh yeah, the market's looking like it's gonna go up. I need to get in a trade. Boom, boom, boom. They start fucking clicking. I don't know if you guys can hear the click on Zoom, but click, click, click. They want to be in, right? And because they're just so afraid to miss the trade. But who cares? You're not going to hit every trade. You're not going to win every trade either, and you might miss some A+ setups or some easy what we determine when we look back as an easy setup. And it's just not that big of a deal. It's blown out of proportion into being like kind of this huge deal of I need to do this. I should have done this. Like that's what your journal's for. Yeah, they're looking for that hit of dopamine. They're looking for and they've done studies in this in actual traders. And you know what? The biggest dopamine push is not in winning the trade, it's actually entering the trade. That's where the dopamine actually kicks in. So that tells you right there that that's what you have to focus on. Right? You got to focus on getting in the trade in the right spot. It's not, people might think that, oh, well, my dopamine hit is when I win the trade. Well, are you a fucking scientist? No. And they've done scientific studies, and if you're looking for them, just look them up on the internet. You'll find them. It's the entering of the trade that gives these people the dopamine hit. And so, what you want to be paying attention to is developing value. So, we come to today, and today's a very interesting day. We'll do yesterday real quick. Right? Yesterday was easy fucking trade. Of course. Um, or Friday, excuse me, it was like the easiest fucking day to trade. And of course, I wasn't on the computer till real late, so I kind of missed the whole rally. But very easy day to trade. Market just opened, touched yesterday's value area high, and then just traded higher for the rest. Right, there's a couple pullbacks in there, but like I said, even if you got long here, very tip top of the breakout, pulls back against you a max total of 17 points. Had you held, up to this upper distribution, right, you could have made money. You held back to see the value develop higher, break even, whatever. It's just a matter of trading with developing value. You can see the value areas squared in this gray, and value area closes up. So today, right, and I think a lot of people for some reason were looking for longs early, even though, well, they were in our Discord, they weren't, but had they, been in our Discord or been in our room paying attention, we had talked about, well, this is a +4 day. So any longs that we take, we need to be very careful because the settle's way up here. This is what I call Peter Reznicek gap. Peter Reznicek over at Shadow Trader considers his gaps from the settle. We still haven't filled that gap. And we looked at it like this. Two distributions, overnight inventory was 100% at short, failure to get back up into this. We opened here, traded into yesterday's value, and then started trading back down. Boom, we nailed the short right off the open. Or a little bit after the open, right? We talked about buyers even getting stuck. It was a fairly simple day. Now you're like, oh well, what the fuck? You could have got long from down here and there would been a huge gain. Yeah, if your aunt had a dick, she'd be your uncle, right? You can what if everything to death, but if you look at the day, value has developed lower. So, optimal trade location naturally is going to be a very key thing, and it's going to be based individually. But today, value area developed lower. Just a fact, right? You can see the value area in the gray, and it's developing. So, what are the odds here for the rest of the day, right? Well, or let's do this. Let's ask ourselves two questions now. Pretend this is the open. What would have to happen for value to start developing higher, and what would have to happen for value to start developing lower? Well, in order for value to develop higher, the market has to move up, and it has to move up pretty swiftly because it needs to spend time higher. To move lower, it needs to move down and spend time. If you get this peak down and peak back up, well, because we have value here, we get a peak down, comes back up, here's value. Value compared to the previous day, overlapping to lower. So it's a key thing, especially because this day was a +4. We want to be short, right? Regardless of if you had opportunity to get longs, had you been patient and waited for shorts, you would have been a winner, right? And you're like, oh, well, I miss out on all this, right? Well, if you're someone who needs to be in the trade all the time, good luck long term, okay? Now, like I said, I'm going to bring this all the way round back to our bar chart and talk about how these open, high, low, close, the data points that everybody can see is and can be factored into longer term trading. Some of us are more looking for a longer term swing type trade or monthly trade or so on and so forth. They don't want to be in the market every single day and doing this and doing that, and just becomes too consuming, or they don't have time, or whatever the reason is. And so what we do every day is we always zoom out, right? We zoom out to the monthly chart. Well, on the monthly chart, we've have a previous month, right? Because now we're in December, gives us nothing. It's a +2 or -2. So there's nothing really to gather from that. Okay. And if we switch to the weekly, well, last week's was a +4. So at 4,600, I think it was 4,675 was actually the settle. So we know that we need to be cautious on a weekly time frame that there is probably some momentum longs trapped the upside. So if we were to take this low, probably some stops are going to come out. Okay? We apply this basically all the way down to our daily. I haven't really found any effect on it. I mean, I haven't really done any research on it, like on like a 4 hour, or 2 hour, or 1 hour, whatever the time frame might be. But this is how you can kind of develop that bias. So you get the monthly gives you no information. So monthly gives us nothing. Weekly gives us a +4. So the weekly bias is up if we're above the 60.75. If we're below, we know we need to be cautious with longs. Okay. We switch over to the daily. And Friday was a +4 day, right? You can see we have a developing -4 day here. But Friday was a +4 day, same settle. So we know we need to be cautious with longs below. You're like, well, if I miss out on this? Well, there's other rules that can apply, right? Balance. And like I said, if it's the settle, if you're far away from it, no, there's probably some opportunity, right? But the opportunity still kind of remains to sell these rallies unless the market gets above, right? And it makes it easy because you know, should the market get above that settle, then you're probably off sides, and you need to exit short trade in that situation. Um, so you can really kind of apply this all the way from the monthly down to the daily time frame to help you. Right? And if you really wanted to nitpick, which people love to do, take your TPO, put it back on 30 minutes because we're gonna this thing a month. And so if you're looking to trade on the monthly, right, you didn't get a +4 or -4 on the previous month, but um, it's not showing 2 months. It was last month. Anyways, um, just the date. This is when it starts, I guess, 11:30. This one starts on 10:31. So this is November and December. So we pop this out, and you can see the first thing that it does is break the value area high. So on a monthly basis, right, you're looking at this upper distribution. You're looking at the settle, the weekly E1 close, or the monthly close, which was here, a little bit higher. It's like 75, it looks like. You're looking to get long kind of in that area on a monthly basis, right? And where would your stop be? Your stop would be down here somewhere, right? Because you're looking to come back up and take that high. Right? If you want to be, risk to reward 2 to 1, well, you're going to have to hold it a little bit longer. But the same application applies, just a matter of the duration that you're going to trade with. Change to a week. What has this week done? We don't include the Globex section. I don't, but it's just on here. So the first thing we do is we take that value area high. We're kind of looking for longs here on a weekly basis. Well, you're going to have to trade against the weekly low, looking for a pullback inside this distribution. So let's say you did get long here. Maybe you got long here. Well, you're looking okay for now, right? You probably maybe close at the value area high. And so like I'm saying, depending upon the time frame that you're trading, it really is kind of dependent upon where you're, like how your trade location becomes favorable. If you're trading on a daily chart, then it's not going to be the same. A favorable trade location is not going to be the same as it would be on a weekly chart or a monthly chart. It's going to be different. And so, well, today, what's the first thing we do? We break the value area low. So what are we looking for? We're looking for shorts. Have you taken a short today? You're probably in profit, right? Unless you took a short at the very low. But then you're not, there's other principles you're not really paying attention to. But it's just that simple. And the reason it is that simple is because these are 4 data points that everybody is looking at. Every single person is looking at these 4 data points. That's the open, the high, the low, and the close, right? Those are things that I think can't really be argued, regardless of time frame of trading. Unless you're trading on a fucking 12-second chart, you're still looking at the high and the low, right? We can at least agree that everyone looks at the high and the low, maybe not the open and the close, which they should, but it's kind of the idea for this. And it is that simple. And you just saw, we just went through the entire month of November and we're up 160 points, right? If you wanted to pop out your handy dandy calculator, and this is like you're trading a 1 lot, you would say 160 times 5 is $800, right? Everyone could use an extra $800, right? If you did 160 times 50, if you're trading the ES, extra 8 grand. Everybody could use 8 grand a month, right? And the great thing about this, just as every trading strategy has, but people just really don't understand, is the trade itself. It's not like more is better or more is necessary, right? The great thing about this is that the only thing that changes is how many lots you put on. So let's say you're trading the MES and you did 5 lots, or let's say you did 3 lots every day. So you'd take that 160 and you'd times it by 15. Now you got $2,500 for the month. And that's generous, right? I think that you would have been better off than that. But November was so fucking easy to trade, right? Close your eyes and buy. But for the most part, the only thing that trades is the amount of leverage that you put on. The trade itself is the exact same trade. And you could use the MES if you have the leverage available to kind of average into a trade, maintaining that stop point to mitigate the risk, but to give yourself or to build a more favorable trade location. Right? There's that opportunity as well. And so that's pretty much it. Now I kind of yammered on for a decent amount of time, but hopefully everyone has a decent understanding of how simple this actually is. And I would like to get together and do like a more formal class. This is kind of hip pocket, right? I didn't prepare any of this or script or anything, which I typically tend to work better on shooting from the hip, right? Like fucking Doc Holliday. But when it comes to my trading, I'm very prepared. Right? And preparation, like I say, stick to your trade plan and manage risk, right? Those are the 2 most important things. And you're not going to be able to stick to your trade plan if you don't have it. So If that's something that you're interested in, comment below the video. If you're new, right, obviously the people that are in Zoom don't need to comment below the video, but you know, only thing that we ask is that you be positive and respectful, and look for the willingness. What we look for is the willingness to learn, right? We're not looking for someone to come in and be like, well, this or this and this. Everyone's at different points in their trading career, and we're all looking to learn together. If you've got something to bring to the group, that would be great. I'm always willing to learn new strategies, always looking to learn new strategies. But this is something that I've back tested, and I guess, what do you call it when you're actually doing it? Um, you know, like, I created a drug, tested it on monkeys, and then decided, damn, that drug's great. I'm gonna start taking it myself. And then it's so good that I was like, shit, live trial. There we go. Um, and so hopefully, you guys can kind of grasp the concept, and really just relax, right? Trading is so stressful, but it doesn't need to be. And if you just pay attention to value and developing value, and use these subtle little clues that we get throughout the day, you'll be better off, I think, than most people out there. Um, and we've got a lot of knowledge in our group. Uh, for the most part, I think almost every person has passed those funded challenges. Um, I'm teaching my kids how to trade. Um, my son's actually in a trade right now that he set up before he left for school, and it's down actually $150. Um, but whatever. That's how you learn, right? That's the nice thing about Apex, is he's just learning on Apex. But you know, it, it's it's that simple. Like, I'm teaching it to my kid, and he's 10, right? And of course, you want to have the willingness to learn, but it's easy to be like, hey, Curtis, if I tell you that this is value, this is today's value, what did value do? Moved lower. Okay, so if it's moving lower, what should we do? We should trade lower. And that's what he calls it, lower. So, but short, right? You're getting short. Um, but it's that simple. And like I said, you're not going to win every day, but as long as you manage the risk, like you saw, I think our biggest losing day when we went through all of that was 16 points. Our biggest winning day was about 23. So the difference there is not, immense. And if you start winning one, losing one, winning one, losing one, winning one, losing two, might be back down to break even. But for the most part, um, at least in my experience, trading with value, even if you do take some heat first, pretty much going to finish on the right side of the market. So, yeah. Other than that, if you have any questions, just let me know.